virtually nobody actually owns Bitcoin. People have some, their savings, but what they actually own is everything else. Because nowadays, if Bitcoin goes from 100,000 to 250,000, we're all like, oh, find me a better asset. This is shit. I'm like,
It's
I
amazing.
mean,
So
for normal people, that is the greatest asset of all
that
time.
is
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. As the fiscal year draws to a close, Bitcoin has surpassed the significant $100,000 threshold, establishing new all-time highs and rekindling discussions regarding its valuation. Critics often characterize Bitcoin as super expensive, a viewpoint that reflects the historical skepticism associated with gold. This prompts a critical inquiry in the realm of investment. How do we define expensive accurately? Macro investor Raoul Pal emphasizes the impact of anchoring bias on the valuation perceptions within the cryptocurrency market. Numerous individuals concentrate on Bitcoin's present valuation instead of its prospective long-term returns. While a $100,000 investment might appear out of reach for many, the inherent divisibility of Bitcoin enables individuals to invest in smaller increments, thereby broadening accessibility for a wider range of investors. The essential factor to evaluate is not the present expenditure, but rather the anticipated percentage yield in the long term. Historically, Bitcoin's halving cycles have shown significant growth patterns, frequently resulting in returns that triple or exceed previous levels. The observed cycles enhance Bitcoin's attractiveness as a high-growth investment, especially for those adopting a long-term investment strategy. Pal also evaluates the inclination of certain investors to pursue cheap assets, anticipating that they will mirror Bitcoin's rapid ascent. However, these strategies frequently disregard market fundamentals and the intrinsic potential of an asset. The decentralized characteristics of Bitcoin, along with its capped supply and increasing acceptance among institutional investors, reinforce its investment rationale. The capacity to function as a safeguard against inflation and a repository of value within a digital economy positions it as an attractive asset class. Although often viewed as expensive, Bitcoin's past performance indicates that it continues to be a compelling choice for investors looking for significant returns in an environment characterized by declining yield prospects. Investors ought to concentrate on the underlying growth factors of Bitcoin rather than its attention-catching price fluctuations. Key elements to consider include adoption rates, network effects, and favorable macroeconomic conditions. As Bitcoin progresses, grasping its long-term potential instead of fixating on its present price will be crucial for realizing its value within diversified portfolios. And lots of things Raoul Pal discusses, so please watch the video to end. And share this video and subscribe our channel Everyday Finance. Thanks.
of a thing.
Another thing when you zoom out is people are like, yeah, the institutions are coming and corporations are coming and governments are coming. Well, for this asset to get from 2 trillion to 10 trillion, you need a shit ton of money. It kind of has to have adoption by major people at this stage, because there's no way retail can drive Bitcoin from 2 trillion to 10 trillion. So it is the adoption wave. We were just lucky because this is the first asset known to humanity where retail were first.
Yeah, you can front run the institutions and the big money.
We managed to front run all of these fuckers.
And you can still do it.
And you can still do it. You can
across
still do
the board, including Bitcoin, by the way, in my opinion.
That's right. You're still front running everybody. It's extraordinary. I mean, what a time to be alive. What a time to be alive. I mean, yes, look, there is an enormous amount of speculative risk taking, but this is, and I've said this for a very long time now, is the greatest macro opportunity of all time. Yes, you can be ultra safe and just own Bitcoin and you'll do very well indeed. Or you can try and figure out how to make more money because really, you got a tailwind. Everything goes up. When the music stops, a lot of this stuff goes to zero. But I don't blame people for playing the game. And the game of the biggest mid stuff, okay, that's a very big game indeed. You know, the when Ethereum started, or Solana, or Sui, or Apps, or whatever it is, right? These things are incredible wealth generating machines. So there's an interesting structure to markets. Is there are more VCs and airdrops than there are secondary professional pools of capital in crypto. Call them hedge funds. You know, it's quite funny because everyone's like, those bad VCs, they get tokens early, they dump them. What's happening with Pengu today? Everyone's taking their cash machine and selling it immediately.
It dumped to crap, huh? I didn't really look, but I saw a lot of red.
I don't know,
Yeah.
but they've all done the same. And I've still
Right.
got shrapnel of my ape coin and all of the shit that I was like, my MFA coin, you get given this stuff. It's like free money. Isn't it amazing? I've just been given 10 grand. 3 days later, it's worth 12.
I heard people who held a Pudgy Penguin at the launch got $85,000 worth of Pengu token. Okay. Anyways, yeah, it's a lot of money.
So anyway, so why there was the big fall is there's not enough secondary buyers because it's retail. The hedge fund industry, which, you know, I've got this asset manager, Xpan, which invests in crypto hedge funds. There's not that many that are of any size. And the total size of that industry is maybe today is maybe $10 billion. The traditional hedge fund industry, $4 trillion. So what happens is the VCs exit, think of that as an IPO, early IPO, and there's not enough asset managers to buy it. So prices fall 80%, 70% before they clear. And then these guys do their homework and say, what do they want to own here? You know, do I want to own Aptos when it comes out and dumps, or Sui when it comes out and dumps, or Monad when it comes out and dumps? Retail could play that game, but they tend not to because the retail are always the IPO buyers. Oh my God, Pengu's out today. I must buy it. Smash. But I think it's just a structure of markets thing. So I don't think we need retail. I think we need more institutional money into the hedge funds and the professional trading to have professional capital, lower the volatility, and make the space a little more functional.
The current price movement of Bitcoin indicates a challenging situation as it attempts to uphold support around the mid-$90,000 level. This development aligns with a subdued weekly close and the ongoing holiday season. Analysis of technical indicators and chart patterns indicates a difficult forecast for the leading cryptocurrency in the short term. The appearance of a bearish engulfing candle on the weekly chart has prompted apprehensions regarding a possible multi-week correction, indicating a potential conclusion to Bitcoin's recent 5-week uptrend, as highlighted by notable trader and analyst Rec Capital. The breach of essential weekly support levels has increased the probability of additional declines. Experts caution that any potential relief rallies could convert previous support levels into new resistance areas, which may further strengthen bearish momentum. Traders are increasingly speculating about a potential deeper pullback to March's all-time high of $74,000, as historical data indicates that 30% corrections frequently occur during bull markets. A decline to this level would correspond with historical trends and may act as a reaccumulation phase for long-term investors. Trader Josh Rager noted that, although the present price movement has been lackluster, it does not signify a disastrous situation. A 30% retracement to $75,000 may establish a more robust foundation for the subsequent phase of Bitcoin's upward trajectory. In the current market analysis, Trader Gel has identified similarities with the Bitcoin price movements observed last year, indicating that a potential upward trend may emerge following an extended period of consolidation and volatility. In light of the prevailing cautious sentiment, there exists a degree of short-term optimism. Charles Edwards, the founder of Capriol Investments, highlighted that December 26th has a historical tendency to yield robust returns for the S&P 500, referring to it as the highest returning day of the year. This trend may offer a psychological uplift to the wider markets, including Bitcoin, which has demonstrated a growing correlation with conventional financial assets in recent years. Despite the potential challenges Bitcoin may encounter in the short term, its overarching long-term narrative continues to hold strong. The ongoing institutional adoption, favorable macroeconomic conditions, and the growing utility as both a store of value and a medium of exchange remain fundamental to its investment rationale. The upcoming weeks could represent a pivotal time frame for traders and investors to assess potential entry points, particularly as Bitcoin nears historically significant thresholds such as $75,000. Maintaining patience and concentrating on structural trends rather than succumbing to short-term volatility will probably be essential for successfully maneuvering through this market phase. Let's back to the Raoul Pal interview.
But yeah, we are going to need a lot of liquidity to deal with this. And normally these unlocks really add pressure on the downside in the down cycle.
Right.
And that's why these things go down 99%. And then after that, we can figure it out what's a good token. But the other point you made earlier is how much block space we need and what type. We are going to need an astronomical amount of block space if we're going to put the whole internet on this. But are we going to need infinite number of block space providers? Definitely not. How scalable are the ones that are out there now? Most of them are very scalable. And Ethereum will sort its shit out and it'll become extremely scalable as well. And therefore, you kind of think there's not much room for others. Some will be more niche and some will be like for gaming and some will be
the
for
gaming chain, the NFT chain, the metaverse chain, if that's a thing. Yeah.
Could be, or it just could accrue to the top 5, whatever those are. And Bitcoin being separate because it's not a smart contract. But yeah, the top 5 smart contracts, and that war will fight out like it was with computer manufacturers, like it was with email providers, like it was with, I mean, it's everything. It's cloud.
In this case, you can make a lot of money on the ones that die before they do. Because you have the speculation cycle before you have an adoption cycle. And we all know that in the next 6 months, it's going to be.
And don't forget, these things never die. Tokens never die. Unlike
FTT
equity.
is trading at like $1 billion market cap or something.
Yeah. You know, you and I know at some point there'll be an enormous rally in Luna. Because what a fucking meme. The thing that blew up the world last time, you know, at some point we'll be looking around, it's trading at $50 billion. You're like, what the fuck? But because these things don't die, the tokens never go away. Which is another bizarro world.
Yeah, it's like you'll be trading Enron stock right now. Although I heard that they're coming into crypto now. Somebody bought the rights to Enron.com or something.
You can make this shit up, right?
No, you can't.
I always try and observe what is going to be the thing that we shake our heads up at
next cycle
in 2026, 27. Yeah. What is it going to be? We know memes. We know that it's stupid shit and most are going to zero. So that's not head shaking.
The holiday season introduces distinct challenges for the cryptocurrency market, primarily stemming from the diminished liquidity often seen during prolonged out-of-the-hours trading periods. The current low liquidity environment has the potential to exacerbate price fluctuations in both directions, resulting in increased volatility. Mark Cullen emphasizes the importance of 2 key liquidity thresholds to watch as we approach 2025. $115,000 and below $80,000. The specified levels indicate potential zones for significant liquidations, contingent upon the initial movement of Bitcoin's spot price. A decline to $80,000 would be consistent with historical patterns observed during Bitcoin's bull market corrections. Historical trends frequently demonstrate that price corrections surpassing 20% are common during the progression toward new all-time highs. Analysis of on-chain data from Glassnode indicates that the current cycle exhibits a lower level of volatility in comparison to prior cycles. The most notable drawdown recorded to date was 32% in May 2024, with the majority of corrections remaining within a 25% range of local peaks. The observed reduction in volatility indicates a rising interest from spot ETFs and a greater involvement from institutional investors, contributing to the stabilization of Bitcoin's price movements. Cullen analyzes the potential for a festive swing, suggesting that Bitcoin may rapidly approach both liquidity thresholds of $115,000 and $80,000. This situation is likely to result in considerable liquidations across the spectrum, presenting opportunities for traders to leverage swift market fluctuations. The overall market outlook continues to be optimistic, even in light of possible short-term fluctuations. The growing participation of institutional investors, highlighted by the rise in spot ETF demand, reinforces the credibility and stability of Bitcoin as an asset class. During the holiday period, investors may find strategic entry points, especially if Bitcoin approaches the $80,000 range, indicating a typical correction within its upward trend. Market participants should be aware of the possibility of liquidity-driven price fluctuations and should prioritize a focus on long-term trends. The historical performance of Bitcoin, coupled with the changing macroeconomic environment, indicates that price declines could represent strategic accumulation opportunities instead of indicators of underlying weakness. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.